Welcome, crypto fam, to the #1 daily Bitcoin pod. This morning we recaptured $70,000. Respect the pump. In today's show, I'll be breaking down the latest Bitcoin technical analysis, as well as the 5 things to watch out for in the Bitcoin market this week. Also, breaking news: Bitcoin ETFs around the world now hold 1 million plus BTC under management, clearly with BlackRock leading that race. And also, Ethereum price chart is now hinting at $4,000 breakout to new all-time highs. We're also going to be discussing danger as wave of crypto influencers and celeb X accounts have been hacked. We'll also be discussing Argentina aims to learn from El Salvador's Bitcoin success, quoting the high priest of Bitcoin, Max Keiser. Malay's mission to save Argentina only starts when he makes Bitcoin legal tender and outlaws frauds and scams like ETH, Web3, NFTs, ICOs, Cardano, etc. Until he does that, he's just making the situation worse. The Bukele model works. Why F around? But anything else? We'll also be discussing rich dad Robert Kiyosaki advises buying Bitcoin before the price explodes and also gives us a warning of bonds crashing. We'll also be discussing Bitcoin will reach $1 million per coin because $1 million per coin because of this little known phenomenon I'll be breaking down for you. We'll also be taking a look at the overall crypto market. All this plus so much more in today's show. And if you're new to the channel or new to the live stream, important to hit the like, repost this, share it, spread the word, let people know we're live. It greatly will help out with the algorithm. Obviously, the more eyes we can get on the stream. So I thank you for that. Today is pod episode number 1652. I'm your host, JV. It's Monday, the final week of the month for May. It's the 27th. And yeah, another beautiful day in crypto. So let's kick it with our market watch as we do each and every day. This morning, we recaptured 70,000. Currently at the time of the live stream, we're still above 69,400, still in the green for the day. In fact, we actually tapped 70,500 when I checked the price. And we also have Ether trading at roughly 3,900 in the red, while Solana, XRP, Cardano, AVAX, and the majority of the alt market is pumping and in the green. And checking out coinmarketcap.com, we're sitting at a 2.6 trillion market cap with roughly 74 billion worth of volume in the past 24 hours, which is up roughly 40%. And Bitcoin dominance is at 52.7%, with the Ether dominance at 18.2%. Checking out the top 100 crypto gainers for the past 24 hours, we got Floki up 19%, Bonk up 11%, and Whiff up 10%. That's 3 meme coins for you. Some say meme coins rule the world. What do you got to say to that? We also have Chainlink, Boom, BGB, and W also pumping and in the green. Now, which altcoins are you guys most bullish on? And shout out to Stacks. I see they updated their logo to the Bitcoin orange more recently. I like it. But anyways, let me know which alts you're most bullish on for this particular bull run. And checking out the crypto bubbles to get a visual perspective on the daily. Roughly 90% of the market in the green. Respect the pump. Meme coins leading the pack. And checking out the crypto greed and fear index. Today we're rated a 74. Hey, I like 7s and 4s. You add those two numbers up, you get an 11, just saying. But we're in greed. Yesterday was a 75. Last week a 70. And last month a 67 in greed. So there you have it. My crypto la familia. Where do you feel the month of May will likely take us as far as the price action is concerned? Holla, let me know in that live chat. But anyways, fam, let's now discuss the 5 things to watch out for in the Bitcoin market this week, shall we? Let's start with number 1. Bitcoin price snatches 69 level. In fact, as I mentioned earlier, we actually tapped 70,500 here this morning. Here's the 1-hour chart you can see. So Bitcoin effectively closed the latest gap in the CME Group Bitcoin futures market, another bullish indicator. And we did this on a holiday. Happy Memorial Day, family. Quoting Dan Crypto Trades, basic weekend price action thus far. The weekly close, which came in at 68.5, was nonetheless Bitcoin's strongest since the start of April. And also, quoting material indicators, a green weekly close for Bitcoin has met with another failed attempt to RS flip 69,000 in a new trend precognition signal on the weekly chart, referring to the proprietary trading tools he's referencing. He says, for me, a push above 71,250 invalidates. We shall see. Now, the latest data from CoinGlass shows key areas of liquidity built up around the spot price, leaving traders to guess which will be taken first. And this is the Binance order book. You can see here the levels to watch out, 68.1 and 69.8. Were the key levels of interest. Bitcoin is aiming to consolidate in these levels, according to analyst Mikhail Van de Poppe, who also wrote, "Where to buy? Losing 66, and I think we'll test range low and be buying there again." That's the level where you'd want to get your purchases ready. The next factor to watch out for is this a breakout or a breakdown? Personally, I feel it's more likely going to be a breakout because I have a feeling we're going to recapture price discovery mode above 73,800. There's just too much bullishness in the market, especially considering the timing of the market with the 4-year cyclical cycle. Now, a call for 95,000 in June and even 150,000 by the end of the year is being reinforced by respective sources. Let's discuss it. We have Bitquant, the originator of the former prediction, who last week suggested the Bitcoin price dips within the range, which should be ignored. We covered this prediction on the pod. He said, "The only thing I'm confident about is that Bitcoin is going to $95,000. Let me know, family, when you feel Bitcoin is most likely to reach this inevitable target." And yes, I said inevitable. They also shared that both resulted in massive expansion afterwards. I'm not expecting Bitcoin to go slow this time either. Once it leaves this price range behind us, and you can see on the chart, it shows you the previous cycles, 2013 all-time high, parabola, and then 2017 all-time high, another parabola, 2021 all-time high, and rinse and repeat, aka deja vu. Next factor to keep your eyes out on this week is the Bitcoin halving is not priced in. That's right. According to REC Capital, the analyst, he says the longer we consolidate here, the better for Bitcoin. REC Capital nonetheless stated the upside continuation inevitably ensues once such phases are complete. For this most parabolic phase of the cycle, he continued, a Bitcoin price target of approximately 150 Gs is appropriate. This weekend, meanwhile, he suggests short-term sideways Bitcoin price action may need several weeks to resolve. Next factor to watch out this week, PCE data leads the macro week. That's right. Asia trading session produced no surprise, and attention thus focused on the end of the week. Here we have U.S. macro data prints a return headline for the producer price index, known as the PCE, for the Federal Reserve. The mood when it comes to risk assets benefiting from loosening Fed policy remains conservative. Interest rate cuts are not expected until September or later. Interesting, as I'm going to share later with you on the pod, Rich Dad, Robert Kiyosaki, is suggesting 100,000 Bitcoin by September. So let me know if you feel Bitcoin will break that 6-figure milestone by September as well. Now, despite the U.S. Stocks, they continue to hit new all-time highs, despite all the shenanigans. Quoting them here, short but busy week ahead. That was according to the BC letter. They say the daily momentum indicators like the S&P 500, SMACD, and RSI are extended, indicating potential for mean reversion lower. While I would not be surprised to see our partial retracement of the recent gains for the stock market, I expect any downside is just a pause in this bull market. Let me know if you agree or disagree. Next factor we'll keep our eyes out on this week, the Bitcoin whales stay in the game. That's right. BTFD family, smart money, I say, always follow the smart money, hence the whales. Quoting the analysts here, Bitcoin whales have been buying like never before. Let's go. The data shows the balance of whale addresses active within the last 24 hours at nearly 500,000 BTC, easily the largest on record. I mean, the charts don't lie. Here, brought to you by CryptoQuant. As you can see on your screen, it shows you in Bitcoin the balances for whale addresses going absolutely parabolic right now. Bitcoin demand growth seems to be stabilizing after being in a decelerating trend since March. Game time. Now check this out. Bitcoin ETFs around the world, which just officially went live in the United States January 11th, when they got the nod from the regulators of the SEC. They now have over 1 million Bitcoin under management, and the primary custodian for the majority of them is Coinbase. So it ultimately means Coinbase has over 1 million BTC as a result from the ETF launch, which was back in January. Pretty wild. BlackRock is now the largest hodler of Bitcoin in the world as far as a asset management firm or company is involved. As prior, it was GBTC. They once had, I believe, over 620,000 BTC. Then after the ETF, they dumped many of them, and I think now they currently have under 300,000. I think BlackRock alone now controls over 400,000 BTC. Let's do a little Ethereum technical analysis. The price charts hint at 4,000 breakout to new all-time highs. Let me know if any of you are actually bullish on ETH. The Ether price rose over 27% over the past week, flipping key resistance areas into support. Following the price rally, Ether broken out of its falling wedge, a pattern that indicates a potential reversal from the previous downward trend. The breakout could signal a rally to new all-time highs, according to Jelly. That's right. The trader shares here. ETH broke out from the falling wedge, then flipped key areas into support. Now pushing for 4Gs. New highs and new all-time highs are next. Getting close. The falling Bitcoin dominance also suggests that the trader's attention is rotating towards ETH, as bounced in the past few days. Bitcoin's dominance fell over 0.98%, so still less than 1% during the past 5 days, while the Ether dominance rose 4.4%. That's right, it rose 3% within 24 hours after Ether pumped 20%. That was off the back of the insiders knowing the regulators were going to approve the spot Ether ETF, which we covered in the pod. And over the past 24 hours, the Ether dominance rose 1.5% almost, while the Bitcoin dominance fell 0.5%, according to TradingView. Here's the outlook right here. Now, most of Ether's current price rally is attributed to positive developments around the spot Ether ETF, which we know. May 20th, Ether price wrote, that was wow. So literally a month after the halving on 5/20. Ether price rose 20% in a day, following reports of the US SEC U-turning on their spot Ether decision, and possibly due to political pressure, with reports stating it asked ETF exchanges to update their 19B4 filings, which was the sign, and adding to the positive investor sentiment, Ether price could rally to the 4,500 mark before the first spot Ether ETFs actually start trading, according to founder and CEO of crypto-focused investment firm D-Finance Capital, quoting him here, 4,500 before the spot Ether ETF goes live for trading, in my opinion. Let me know if you agree with that. Now, the Ether price faces significant resistance at the 4,000 psychological mark. A potential move above 4,000 would liquidate over 433 million worth of cumulative leverage short positions across the exchanges. Now, that's wild. I remember back when Ether was like $70, $80. I know some of you are OGs. You probably remember when Ether was a couple of dollars, but it's just mind-boggling to me that it's even as high as close to $4,000. You know what I mean? Wild. Now, ultimately, ETH price needs a weekly close above 3,900 to mark a confirmed sustained bullish momentum. Quoting Rack Capital, Ethereum just needs the weekly close above 3,956 to move into 4,000 plus territory. At the moment, ETH is forming a lower high. So there you have it, family. Where do you feel the Ethereum price is likely to go for the cycle peak? Holla at your boy. Do you think realistically Ether can eclipse 10,000, maybe even 15,000 for the cycle peak? Let me know. I'd love to read your comments and thoughts out loud. Hacked alert. I don't know what's even actually going on, so I'm anxious to read the story to you because all I saw yesterday on my timeline on X, Caitlyn Jenner launching coins. And I'm like, this is obviously a scam. He got hacked. But consistent all day and even today, no, I really do have a coin. And now I'm all confused. I don't know what's really going on. Are these influencers really getting hacked? And are hackers pitching these, they look like to me, scam coins? Or is this actually real? And Caitlyn Jenner is actually pitching her own coin. Let's break it down, shall we? Now, a string of industry influencers and celebs had their X accounts hacked over the weekend, shilling everything from Luna 2 and Ordi to celebrity-inspired meme coins. Amongst the latest victim is gigantic Kiyosaki Rebirth. What does that even mean? Known as a GCR? A synonymous crypto investor known for profiting from contrarian trades, who confirmed their X account was hacked. His X account posted about Ordi and Luna 2.0. Would you guys actually ever invest in a scam that comes back, such as a Luna 2.0 or FTX 2.0? Do people really fall for that? Apparently they do, or they wouldn't do this. But crazy. Both those tokens surged 6% and 274% momentarily. Shout out to Mateus. He just gifted a MicroStrategy membership of the YouTube channel to Jerome. Jerome, you've been hooked up. So thank you, Mateus. That's very, very kind of you. So yeah, the guy wrote here, bro, couldn't have picked any believable micro cap to pump 10 to 20x, yet chose to shill Ordi and Luna 2 for a measly 10% wick. Now, Ordi has already amassed a market cap of almost 900 million, therefore has less upside than the smaller cap coins. They also wrote a more niche celebs are popping up by the minute, launching meme coins on a long weekend when the platform engineers are away. I recommend that you guys be very careful. That's right. Now, another one is the rich kid. I don't even know who this guy is, but this profile amassed a 90,000 market cap. I guess this specific meme coin called pump.fun. I've never heard of this crap either. However, this guy said no statement has been made confirming whether it was really him tweeting it or if it was a hack. I would imagine more than likely it's a hack. Now let's get to the deep fake or real Caitlyn Jenner, because this is the one I kept seeing nonstop over the weekend, and it was almost driving me crazy. I'm like, I don't follow this lady or man, whatever we call it, and why is he or she all over my timeline, like pumping? I'm like, this has to be fake, but let's see. Let's read it. So the new meme coin Jenner was promoted by media personality Caitlyn Jenner, which already amassed 27 million market cap. Oh my God. People are just looking for scam coins to invest in, huh? That's pretty shocking. Industry pundits are debating whether the short by Jenner promoting the coin was a deep fake. However, videos containing what appears to be Jenner and her manager, Sophia Hutchins, has made several statements confirming the posts and videos are genuine. That's why I'm boggled right now. Like, what the frick? The Jenner coin was also promoted on Jenner's Instagram, so it's actually real. The videos we thought were deep fakes were actually real. I'm just so confused. So this is quoting him or her here. Yes, this crypto on my account is real. Wow. And shared with 3.3 million followers. If you want to get in a hurry, okay? Get in right now. Still sounds like a scam the way all this is being pitched. You would think they'd tell you something about their coin, like a use case or some true intrinsic value. But when it's just a pitch, get in now, it has to be a scam. I don't know what to think. The Jenner token was also launched on this pump.fun. Interestingly, the crypto wallet posted by Jenner is the exact wallet posted by the adult content creator Kazumi, who is also suspected to have been hacked. Man, this rabbit hole of being hacked goes deep. So we have the rich, dull, Solja tokens all allegedly tied to Jenner, with one industry pundit has claimed. So I still am confused, even after reading the story. I don't know what's really going on here. I'm just going to assume it's all scams to take your Bitcoin. Regardless if it's really Jenner creating the videos and promoting the Jenner coin, or if it's a deep fake, they're still trying to steal your Bitcoin for their ish coin. At the end of the day, I'd be very weary. And yeah, it's crazy, yo. I don't trust the altcoins. No wonder, Devon. It's hard. These meme coins are very dangerous, especially when influencers are pushing them, because people do virtually anything the influencer says. So I bet you every Caitlyn Jenner fan, oh my God, I've been waiting for this day. Take my money. You know what I mean? Selling everything in the house. I need more of the Jenner coin. Take my money. AI generated for sure. So the video wasn't really Jenner, even though the following day, Jenner and her media manager said it was really them. So who do you even believe? Who do you believe anymore? Crazy, yo. It is crazy. Next story of the day, let's discuss what's happening with Argentina. And before I even read you the story, Max Kaiser recently tweeted after someone wrote, Argentina poverty rate hit a 20-year high of 60%. Oh my God, 60% of Argentina's population is in poverty. That's more than half. That's crazy. As Malay lived out his rock star fantasies, here you got him performing as a rock star. That's allegedly his background. I didn't really know him as a rock star, but I digress. Max Kaiser responded, Malay's mission is to save Argentina. It only starts when he makes Bitcoin legal tender and outlaws frauds and scams like ETH, Web3, NFTs, ICOs, ADA, which is Cardano, etc. Take that, Huskinson. And until he does that, he just is making the situation worse. The Bukele model works. Why? F around with anything else. And may I add, F around, find out. Real facts. I think Max is doing the right thing, putting the pressure on Malay because he talked a big game and he got a lot of the Bitcoiner support. We thought he was going to embrace Bitcoin for his country, and he did a complete 180. So no respect there. But let's break down this story and see what's actually popping. This headline reads, Argentina aims to learn from El Salvador's Bitcoin success. There's a lot to learn from. For Christ's sake, Bukele has given you the blueprint. The government of Argentina is working with El Salvador to learn from its experience of Bitcoin adoption and other crypto activities. Argentina security regulator, which is the National Securities Commission, CNV, held a meeting with El Salvador's National Commission of Digital Assets to address crypto adoption and regulation in the two countries, according to an official announcement. And at the meeting on May 23rd, their president, Robert Silva, and Vice President Patricia Buero of the two different countries, along with President Juan Carlos Reyes, discussed El Salvador's experience of being the first country in the world to adopt Bitcoin as a legal tender, which was back in September of 2021. And shout out to the top G, Bukele. The officials exchanged approaches and concepts of crypto use in global economies, particularly focusing on El Salvador's Bitcoin case. Now, CNV President Silva stressed that El Salvador had not only emerged as a global leader in Bitcoin adoption, but has also excelled in the broader crypto industry. He highlighted the importance of industry insights discovered by CNAD, which oversees and regulates the digital asset market for El Salvador. Silva stated, "We want to strengthen ties with the Republic of El Salvador, and therefore, we are going to explore the possibility of signing collaboration agreements with them." Meanwhile, the CNV Vice President Boero, who visited El Salvador to participate in marketing meetings and development in March, emphasized the crucial role of El Salvador's expertise in the crypto industry. Quoting him here, Argentina is a pioneer in technology, and the National Securities Commission understands and wants to work with the industry efficiently and create appropriate regulations. The news comes amid Argentina moving forward with regulating the local crypto market and passing registration requirements for crypto firms. Back in April, the country has been actively moving into crypto since Bitcoin-friendly politician Javier Milei became Argentina's president in late 2023. However, I wouldn't refer to him as Bitcoin-friendly. He pitched us as Bitcoin-friendly, but has taken zero action to show us what he is actually representing, because he obviously his action is not representing Bitcoin friendly whatsoever. Just FYI to clarify. And in late 2023, Argentina's Foreign Affairs Minister Diana Mondino claimed the government was preparing to decree to legalize the use of Bitcoin and other cryptos in the country for payments under certain conditions. I'm not holding my breath. We'll see if he does the right thing, or is he just another World Economic Forum puppet family? Let me know your honest thoughts. I appreciate that. Shout out Grant Noakes. He just gifted 10 memberships to the channel, to the following: Eric Castro, Mateus. Wow, and Mateus gifted one earlier. The gift that keeps on giving is called Paying It Forward. Thank you, family. Bullet from DC, Christian Pinto, John Wong, Born to Code, Bori Mischief, 17,000 Islands, Ryan Nelson, and Jasso Piana 2000. You've all been hooked up with the MicroStrategy membership of the channel. On behalf of the one and only Grant Noakes, thank you, Grant. Very kind of you, broski. Appreciate that. Anyways, fam, next story of the day. Let's discuss this 100,000 target by September by Rich Dad, Robert Kiyosaki. Then we'll discuss a $1 million price prediction based upon this phenomena I'm going to share with you. And then we'll dive into the live Q&A segment of the live stream. So here we go. The headline reads, Robert Kiyosaki advises buying Bitcoin before the price explodes. And he also warns us for the 10 billionth time of bonds crashing. Amen. So yeah, shout out to Kiyosaki. How many of you have read the infamous Rich Dad classic novel? Let me know. So yeah, he recently posted the biggest lie financial planners tell gullible mom and pop investors. The lie is Bonds are safe. Millions of even so-called sophisticated investors will take losses when so-called AAA bonds crash, when commercial real estate crashes. The once glamorous office real estate market cannot make loan payments, which will take down so-called sophisticated investors when the AAA bonds crash. Now, here's some advice from Rich Dad. Best get into safer real assets such as gold, silver, and Bitcoin before their prices explode. I'm going to read it again. Advice from Rich Dad. Best get into safer real assets such as gold, silver, and Bitcoin before their prices explode. The renowned author has consistently warned of impending stock and bond market crashes, advising investors to buy gold, silver, and Bitcoin. And in April, he predicted Bitcoin could reach 2.3 million per coin and expects Bitcoin to hit 100,000, reaching that six-figure milestone by September. Send it. He frequently urges investors to abandon the US dollar for Bitcoin. I 100% stand by that. Considering fiat currencies are fake money, facts. And those who save in fiat currency, what do we call them, folks? You already know, fam. And in March, he described Bitcoin as a perfect asset at the right time and referred to the US dollar as a giant Ponzi scheme. Preach, Rich Dad. I respect his balls, his kahunas, and the fact he has been preaching this for a very long time. He has no faith in the U.S. government. He has no faith in the U.S. dollar, and clearly he is very bullish on Bitcoin, as he should be, but he's also very bullish on precious metals. I don't hold that sentiment. I don't trust precious metals because I know probably for every ounce of the physical asset, there's probably 100x the amount of derivatives floating around, which is a way they manipulate the markets, which they're infamous for. Big banks, such as the largest bank here in the States, JP Morgan Chase, along with their CEO, Jamie Dimon, they have paid insane amount of fines, and they virtually do every year for manipulating and spoofing precious metal markets. That's why I don't trust them whatsoever. But I know some of you do. Teach their own. I just feel the only unconfiscatable asset that really exists on the planet, which so happens to be the greatest store of value, is Bitcoin. They can take your gold away from you, try travel with it. They can confiscate it if it's a certain amount, probably over $10,000 worth. Hence why in your customs forms when you're traveling, especially internationally, you got to fill out, do you have anything in value of 10,000 or more? Oh, of course. I got all these gold bars. They're worth 15,000. Give me those bars and come with me, young man. Damn it. Am I being detained? Yes, you are. You should know better than to travel with gold bars, young man. But anyways, Bitcoin is the only thing they can't take. And that's even if you hold your precious metals. A lot of people allege the precious metal is in a safe, and you have like the IOU version, which is a form of a derivative, one of the ways the markets are manipulated. And who says your gold is really in that safe? And if it really is in that safe, who says it's actually safe? And the government can't create another gold seizure act like they did back in 1933 and confiscated everyone's gold and deemed it illegal. Do you really trust your government that much? Now for our feature story of the day, let's discuss the Bitcoin price ripping like Scottie Pippen to $1 million per coin because of this little known phenomenon. Let's break this baby down. Enjoy this bullish prediction, fam. So here we go. Bitcoin's unique characteristics make it unlike any other asset in the world. Preach, JV, preach. And it's becoming increasingly recognized and understood by the investors. Facts. The recent approval of the Bitcoin ETFs, which we saw back in January, will only continue to amplify this understanding as these ETFs simplify the process for investors to gain exposure to the king crypto, BTC. And while the approval of spot Bitcoin ETFs have been widely celebrated as an unofficial stamp of legitimacy, signaling that Bitcoin is here to stay, like a true Bitcoiner needed any unofficial stamp of legitimacy. We've known Bitcoin is legitimate, just the fact it's decentralized and it separates money from state. You don't need to really know much else, family. But anyways, there's another crucial dimension to consider. Once this is fully understood, it will become evident that Bitcoin has the potential to reach the coveted 1 million seven-figure price tag? In fact, let me know, live chat. Where do you feel, or when will we hit $1 million? I know it's inevitable. You know it's inevitable, meaning it will happen. But by what date? My prediction, if I had to throw a year on it, I'm going to say 2029, but I'm still open to the possibilities. It can happen as soon as this cycle. And I say that, and I mean it, because Bitcoin have no top, because fiat have no bottom. You know what I mean? Let's discuss the current landscape. The approval of the spot Bitcoin ETFs revolutionizes how the average investor or retail investor can add Bitcoin exposure to their portfolios. And by simply purchasing shares in one of the ETFs through the brokerage, investors, they can bypass the complexities of navigating crypto exchanges and managing digital wallets. But for the real purist out there in crypto and Bitcoin especially, I would encourage you to learn how to self-custody, learn how to trade crypto, buy it on the exchange, and learn the things you should know how to do instead of just depending upon the asset manager to do it all for you, because there's serious consequences involved, which I'll discuss later. This development has the potential to significantly increase demand for Bitcoin's limited and diminishing supply. However, as transformative as the increased access for retail investors is, it will pale in comparison to the tidal wave of demand anticipated from institutional investors entering the market. Let the institutional FOMO surge, family. So before diving into the numbers, it's essential to understand who institutional investors are. For a long time, I heard Bitcoin enthusiasts claim that institutions were coming, but I never fully grasped what that meant. Institutional investors are organizations that invest money on behalf of their clients. These include pension funds, retirement funds, sovereign wealth funds, hedge funds, amongst others. The biggest names out there, clearly, which we know that already have the Bitcoin ETFs: BlackRock, Fidelity, etc. Now, prior to the approval of the Bitcoin ETFs, institutions were either prohibited from entering or hesitant to enter the Bitcoin market due to the complexities associated with owning digital assets. However, with the advent of the ETFs, institutions can now easily incorporate Bitcoin into their extensive portfolios, opening the door to a significant influx of capital, institutional capital, into the Bitcoin market. Now let's crunch the numbers, Just so, how impactful will these institutions be? As of May 15th, it was estimated around 700 professional investment firms own around $5 billion worth of these spot Bitcoin ETFs. And as I read to you earlier, check this out. Bitcoin ETFs around the world now hold 1 million plus of Bitcoin under management. 1 million Bitcoin out of a total circulating supply that could ever be in existence, 21 million. Also consider 1.1 million Satoshi gifted by never touching them. So there's even less. And then there's theoretically 3 to 5 million lost Bitcoin gone forever, which makes the asset that much more scarce. So leading the way is Millennium Management, an investment firm that manages more than $64 billion, with $1.8 billion tied to the Bitcoin ETFs, which is around 3% of its total portfolio. But the list goes on and includes Morgan Stanley, which is the 6th largest bank in the US, Bracebridge Capital, which is a hedge fund that manages investments for Yale and Princeton. Interesting. And even the state of Wisconsin Investment Board now. Now, as it currently stands, retail investors are the primary owners of the spot Bitcoin ETFs. Reports suggest around 10% of the assets tied to the ETFs come from institutions, but this number is growing and will only continue to do so. The influx of institutions into the Bitcoin market will likely be gradual, as they typically engage in extensive due diligence before making any allocations. And unlike retail investors who can swiftly enter the market by purchasing shares of an ETF, institutions often take time to research Bitcoin's impact on their portfolios before making the allocation. So let's crunch these numbers, shall we? After conducting their research, I think they will likely arrive at the same conclusion. Bitcoin's inherent characteristics make it a necessity in portfolios. Eventually, widespread adoption amongst investors will occur, leading to a tsunami of capital inflow. There's no telling how much money, but based on the recent studies claiming that a 5% allocation is the ideal amount of exposure, we can begin to estimate the potential impact of institutional investors. So at 5% of the vast 129 trillion in assets they manage, the Bitcoin market cap can soar to more than $7 trillion and the Bitcoin price beyond 400,000 per coin. However, some analysts argue that a 5% allocation may be too conservative. Most notably, a recent ARK Invest study suggests that the ideal exposure level should be closer to 19%. Imagine that. If this were to occur, the Bitcoin price, I'm going to say, would be over $10 million, because from my understanding of the ARK Invest study, which we have covered numerous times here in the report, or here on the pod. Kathy Wood of ARK Invest has said, if the asset managers allocated a mere 5%, we can see a 2.8. I think she even said now a 3.8%. Or $3.8 million Bitcoin price. So if we threw the number out there as of 19% exposure, easy peasy, a multiple seven-figure Bitcoin price. I think 1.3 million is extremely conservative. You run the math. Like BlackRock, for example, how many billions in assets under management do they control? If they put 19% of that into Bitcoin, game on. And considering they're the biggest, all the small fries and the smaller institutions would follow suit. I'm just saying. And I remember when Larry Fink made the rounds on the news years ago, and they asked him about Bitcoin, and he says he would never touch it, and that it was used for an index of money laundering and had nothing but negative things to say about it, and was clearly an enemy of Bitcoin. Times have changed. The institutions have come around. Now the largest institutions, the largest banks, the major Wall Street players, all embracing Bitcoin. And guess what? We front ran those mofos. Doesn't it feel good? Bitcoiners, let me know.